Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look again on the euro currency and the daily time frame. Today's Friday market, right to the end of the week, has reached our upper border of our destination, short-term destination level. It's an area between 124.80, 125.30 area. This area is a bit wide since this is the target of the weekly time frame, and it looks a bit wide since the daily time frame is lower one. Well, what we see currently on the price section, we see that since market has hit level of oversold, that is blue line, you can see that market has to struggle with this level. It's some kind of barrier that prevent market from the fast and free move to the downside. And you can see that some retracement has started on the intraday chart, so you can see that market has hit oversold, show some pullback, hit oversold again, pullback again. So that's the one reason for the retracements. The second reason is that market now as we said, in an area of the weekly target, and depending on how market will behave around it, depends on the fact will some retracement take place on the daily time frame or not. Also, take a look at the interesting moment that current price action stands precisely at the 1618 extension of that swing, from that low to that high. 1618 extension to the downside gives us the 125.30 area, and that ratio is very typical for the head and shoulders patterns. So if some retracement will come based on the reaching of the weekly target, this could take place in the way of the head and shoulders. So we can't exclude this possibility. This is just an assumption, an idea that could happen, but currently I do not see yet any confirmations of that. This is just a ratio. Market has hit this area. Trend still holds bearish, as you can see. Well, that is the levels that I have marked on the daily time frame, the potential resistances if market will start the retracement. There are two major levels to watch for. The first one is this confluence resistance, 127.07, 127.26. It's right here. And take a look, this is a bit wide area of confluence resistance, because you can see that between 238 levels stand 1618 level, so it could create the confluence as with this area, with this level, as with that level. So we could treat whole area as the confluence resistance at 128.10, 128.87. Also, you can see that this area includes major 38 resistance level from the downward move on the daily time frame. That is really significant area of resistance. On the 4-hour time frame chart is two interesting moments. First of all, I beg your pardon for these noodles. I do not usually use two lines on the same chart, but this is the research. I would like to save some time. Well, the green line is the 3x3 moving average, okay, and that gives us the context for the potential double repo lookalike pattern, because you can see that thrust is really acceptable. It's not perfect, but it has sufficient number of bars. Well, we can see that close above the 3x3, close below, and if market will show the close above, this will be the confirmation of this pattern. Still, I see two problems with this pattern. First of all, because during the first penetration, market has hit 38 resistance. It's major resistance from that swing, and that is not very good for double repo pattern. Double repo pattern demands the fact that most positions still stay on the market. Short positions should hold on the market without taking profit, but reaching the 38 resistance tells that probably some profit has been taken. Well, and the second moment is that market still hasn't quite reached the targets that you will see on the hourly time frame. That's why this is choices up you. Would you like to trade it or not? but in general this is a bit tricky pattern. And the nature of thrust you can see not perfect, since market has shown some bars pause, then thrusting to the downside, again some sideways price action. So that is not perfect thrust price action. Also take a look, this red line is the derivative indicator from the MACD, and here market stands at the verging of the crossing this line, so the shifting trend to the bullish side. This is particularly an area where most stop grabber patterns appear. If market will form the stop grabber pattern here, then it definitely will proceed lower, taking out the previous lows, and probably, since this will be very close to the 125 psychological area, then probably market will try to clear out this 25 area and simultaneously could reach our lower border of our destination area is 124.80. So that's why in the nearest hours you should keep a close look at this candle. So market will form the stop grabber, it probably will continue move to the downside, and this will not be any double ripple here. Well, why it should happen besides of the stop grabber? Take a look at the hourly time frame. In the hourly time frame we see downward development. That was our butterflies, if you remember, we discussed this yesterday. Now we'll see, first of all, you can see nice bullish divergence with the MACD, but take a look at the price action. Although trend holds bullish on the hourly time frame, price action is not. Price action doesn't support it. This is some kind of the bearish dynamic pressure, and usually it leads to some acceleration to the downside. Also take a look at this pattern. A, B, C top, market hits 618 target, retracement, and now it moves below it. Also take a look at this acceleration to the 1618. So this leg currently is much faster than this one. It tells us that probably market could still continue and proceed move to the 100% extension target that stands precisely at 124.80 area. That's the first reason. The second reason, take a look at current price action inside of this widened triangle. Okay, this could be another butterfly pattern. So that was yesterday's butterfly that we have traded it. Okay, and it has worked nice. Now this market could be forming another one. If it will be really true, then the target of this butterfly is 127, stands around 124.80, 590 area. 1618 stands around 124.55 area. So market could, if it will form the butterfly, will confirm this attempt to move to the downside and probably will hit both the targets simultaneously, as well as weekly time frame target. So that's why in the nearest 2-3 hours we have to keep an eye, first of all, this pattern, and second on the potential stop grabber on the 4-hour time frame. If it will appear, then we could say that it's really a high probability that market will clear out the 125 area and will reach 124.80. Also be careful that today is Friday and week was really fast and very successful for the traders who traded on the short side of the market. That's why at the end of the day some profit taking could happen and market still could fall to the retracement. So it's some reasons as of technical picture on the charts, as of the market mechanical picture, that traders probably would like to take some profit. Well, that's our current view on the market. Take care, take a look close at the patterns that we have just discussed, and control your risk.